What's going on, YouTube? Time for another recap. We had another pretty amazing day here because the daily no-tag Fibonacci's that we had been working with here were super clean. We had PPI data with a massive candle here in pre-market and a gap up to deal with. So let's start with that. I didn't post anything on X today, so nothing to go over. Tons of stuff in our Discord this morning for pre-market. We were killing it today, back and forth. We had a monster day today in our PVM Discord. So the PPI data and the gap up. So pre-market over here in the gray, the biggest takeaway was here's yesterday's highs and close. Yesterday's highs is the orange dashed line, white dashed line, yesterday's close. Price action started in a gap up, right? And we call this a common gap. So yesterday's highs, price action opened above, right? So price action opened from pre here, moved down to yesterday's highs, and that was the outlook for the day. I was macro bearish on the day. If we were to go over under, it's the 50 fib over under golden pocket from the PPI. So let's get into it. The PPI data had that big snap up here in, in the pre-market. What I usually do is I like to make a purple channel here at the golden pocket, and we utilize this as an over under point for market direction. So we either are going to stay above that 50, move up to that top, or we're going to move back down. And after kind of sitting on our hands for the first part of the morning here, we definitely signaled to the downside. So what we always do is we fib out the high-low of the 5-minute candle. We pointed it to the downside because we're a little bit more macro bearish for sure. We're coming down to yesterday's highs for sure. PPI is not a data set like CPI or Powell will. PPI is going to come off and go, and especially, start ripping for the entire day. Why is that? Well, psychological catalyst trump technical analysis. PPI is not the move to be shooting off a CPI day. Speaking of CPI, what do we have tomorrow morning? CPI. So the day prior, which is today, Tuesday, is usually kind of like a real low-flying wave day. We don't really get too much over under whatever candle that we had prior. So there's just kind of a day. We just put another regular old candle in as we're swooping by the 100 EMA, which was our short target. But some very interesting things happened on the daily Fibonacci here that gave us really good targets besides the PPI candle. So you see this big old white level right here, 507.72. That was my break point for a hard short in the market. So I drew pretty pictures for our chat like always. Big red candle right here saying, well, not candle, big red box here, signaling any price action under 507.72. This is where you take it short. So we had a little bit of a shy here at the top fill, right? Broke through the purple channel that we had just drawn, right? Lower high, lower low. Great structure. Now let's take a peek at our oscillation indicators. This is the only time the RSI was in the top channel. If you look at that almost whole pre-market over here, RSI was on the low side, low side, low side. MACD under the zero level of the MACD. Very weak buy waves. Had a nice seller beat wave at 9 a.m. at the open. So everything was telling you that the RSI was going to poke back down in here to the bottom side of the 50. And same with the MAC. So we had definite bearish outlooks in the morning to come down to yesterday's highs because there is no reason for PPI to hold a gap up. There's just not. Especially day before CPI. So it's not going to happen. We're going to wait for CPI to get anything kind of crazy going on. Okay. So psychological sentiment said we could definitely go short. So all we had to do is take the PPI candle, point it to the downside, and use some daily no tag Fibonacci. So let's get into that. So let's muster up here the trade that we had onto the backside. We had the PPI pointed to the downside. So when something breaks out of our Fibonacci range, it usually comes to the 1618. And then retraces to the 100, and then it makes a choice, an over-under at that 100 coming from the 1618 extension at 503.83. So when we break out down of the fib, comes back to the fib, right? So from the 1618 to the 100 since the break out of the range, okay? That 5-minute high-low range, crack 1618, back test the 100, and then usually continues. Now, like I said, we weren't going to get a big follow-through up or a big follow-through down because CPI is the next day, so we pretty much closed on yesterday's high close. As expected, nothing too crazy on the Qs, right? So take a peek at the SPY, obviously very similar with the PPI. We had over-under at the 50. You can point these whatever way. We had it to the upside right here, but redo the fib to the downside, breaks out of pocket zone to the 1618, retrace to the golden pocket, right? Because like we said, it comes back to the 100 and makes a choice. It either goes over or under here, right? So it's up to the 100 fib to do what it wants to do for over under. Came to the golden pocket and then failed. But the base right here lo and behold, I just told you to watch these guys the other day. 1 minute unfilled gap, 578.41. Gaps and algorithms are everything. The market speaks to each other with these. I'm telling you, first tags. Let's see where this happened to be. 1 minute yesterday. You're going to see our gap indicator pick up, wrong day, gap indicator pick up a no fill gap. So you see these little green lines. These are the gaps here. And we talked about yesterday how we played this double gap right here where it fell, gapped and gapped, and we knew that that was the top. It's going to come down, hit this gap and this gap, right? So we had a really good short there chasing the gaps. We had another one right here that filled right away, and one that did not, 578.41. If we look at the price action of yesterday, this is where the gap was made to the upside. This is the price action above the gap. The gap is very tiny. These algorithms are very, very, very tight. Imbalance in volume and gap. Look right there, okay? Indicator told us it was at 578.41. Lo and behold, what's the bottom of the market today? Weird. But don't worry, algorithms don't exist. They'll never backtrack, right? Very clean, very clean. This is our part of our algo system on how I track high lows, momentum, and magnet targets, especially being first tag metrics. And you can come and learn all about that in our premium Discord. We stream live every day with this stuff. So 578.41, tag that bottom. Now, golden pocket from this failure here was the over under 50, and that was the sentiment. Now, we're going to get into the daily on the bottom of the market because we're going to have more than one indicator. We always want to stack catalysts, especially Fibonacci. So with our PPI data pointed to the downside, we did have a good area of support. Now the algo from yesterday, that 1 minute unfilled gap, that is a very good point of interest that we knew was going to be a big deal today. It's actually another one right here. Check this out. Gap to the downside, had to return to the gap. So you could have played beautiful, beautiful track back up there. Oscillations are working for you. So daily first tag. So you hear me say first tag a lot, right? A lot. And this is what I mean by first tag. And this is what was so interesting about most of the momentum that we had got today. So the cool thing about today, we were opening up here, okay? Gap up, like we had discussed. Now, we said it was going to just kind of chop around that 100 EMA most likely till CPI. We're going to find some direction. If it opens above that 100 EMA, we said it was going to pop up a little bit. Then we're going to find out what happens live. And that's what happened, pretty much clean and clear. But you'll notice that golden pockets, right? We talked about that Powell candle back here on many videos right here. We put in a Powell candle. Price action ran away from the golden pocket. It had to return to the center of the golden pocket here on that Powell candle. That's the 50 fib. So let's go into the current times here. We have one of those right here as well where there's no action to the right of this candle. So my assumption is CPI is going to nail this thing up. We'll see, but I hope it doesn't. I hope he dropped, but this we'll go over the prediction in a minute here. So the daily Fibonacci is what mattered the most that had no tag. So from 2 days ago and yesterday, notice no 50 tag on this candle, no 50 tag. And a 50 tag is the golden pocket. So if you take the high-low of the Fibonacci, 50 point is 582.24. So I know that we have no tag of this candle's fib. So when we gapped up right here, before we opened in pre-market, let's see how well these levels worked out with a no GP tag. This is from the daily chart that wasn't tagged. We can use this to overlap our Fibonacci PPI as well. And then we get multiple points of interest, right? So again, once we started failing the golden pocket, and you can see how well the price action first tagged it, right? The first time, the 50 fib, the most important thing, the halfway point between high and low of the candle we fibbed out. 582.24. Notice price action that fell from PPI and bounced directly at 582.24. Popped up, gave you a lower high, and went back to 582.24. Then popped again, finally snapped it, and had a continuation trade. Beautiful, right? That helps with a lot of confirmation, is a no tag. This is the first time price action has tagged into this golden pocket that we just drew on the daily candle. Now more so, I left my crew today and I said, guys, if we're going to go lower, we got to break out of the PPI candle, and anything under PPI, we're going to go to the next golden pocket that has no tag. So let's mark out the bottom of PPI, 582. We're going to go to the daily chart. We're going to look at the next candle that has no golden pocket, which is obviously yesterday. Okay. Here, high, low. Wow, look at that, 50 fib. Perfect, right? So I left my crew and I said anything under the PPI, she's going down to golden pocket, 578.59. Wow, lo and behold, right? Now, stacking catalyst is still something that no matter what I do. So just because we have a no tag 50 daily right here, that's one great catalyst that we have a great projection hit, but also we had that 1 minute gap coming in right at the bottom as well. So not only did we have an untagged, no price action has seen 578.59 on yesterday's 50, we had a 1 minute open algo at the exact same area. So when that price action broke out of the PPI to that downside, since we were so downside oriented, all the RSI was downside on your 5 and 1 minutes, you had big drops. Once the base was found at that algo, that higher low RSI did a reverse and came all the way back to that golden pocket and dropped again. Where did it stop? Same place. The first time and now second time, right? First time we're at the golden pocket, second time. Of course, we didn't go any lower there, right? We got a higher low. This is why it's so important to note where your last trade day's high low is for Fibonacci, because if you have a no tag, it is extremely important. That is what helped us with this Powell candle. Let me give you another example of the candles that we just went over there for first tag. The Powell candle right here that he dumped had no GP. Powell number 1. We covered this in multiple videos. Check back. We go over the daily recap on how we use the fibs every single time. Day 1, day 2, day 3. Okay. Day 2 never hit golden pocket. And then it gapped down, right? Trapping the shorts. Because the second it got over 585.73, which is inside the fib range of the Powell, we had a chance to break right to the golden pocket, right to 596.02. And we did. And then we did what? Same jam, right? What did we do? We're going to delete this because we hit the golden pocket. Oh my God, a candle without a golden pocket tag, and it's the next trade day. So if we plan for that day, we're going to now plan for 1223. We're going to make this golden pocket, or I'm sorry, high-low fib, and we're going to look for a golden pocket. Oh my God, look at that, 588.35 to the T. High-low daily Fibonacci can literally change your trading. Okay, this is the kind of stuff that I teach with the algo protocols on gaps that are left open, algo momentum on certain indicators like moving averages. You guys got to be watching this stuff. First tag metrics matter. Prediction time. What's the market going to do tomorrow for CPI? I don't know. Who cares? Whatever the CPI does in the pre-market, we're going to be ready for it after the fact of the candle. But I can speculate for you guys here and tell you a little bit what I would do if I was the market and wanted to scam a bunch of people, right? That's what the market is, trying to catch your money. They don't want you to have any of the mullahs. So they give you psychological scams a lot of the time. So we're going to go back to that gap system we were just talking about. We released many, many moons ago, and we talk about it all the time. Now let's go look at what we're dealing with here up above. 586.32, 1 minute gap open on the chart. Look where it was made, right here, okay? 1/8, January 8th. Bottom right here, after hours, pre-market, no tag, doesn't matter. None of that stuff matters. This is after hours and pre-market. That means that 1 minute gap is still open. Look where the open was right here on 110. Does that hit? No. And lo and behold, we got another one. Same place on the QQQ, okay? So we are showing two exact same placement area gaps here on QQQ and SPY, a double, 512.35. Again, did it hit it on the next day over on the 10th? Nope. You see that price action? Not even close. So pre-market at after hours is open. What would I do if I was CPI? Well, if I didn't know how to trade algorithms and gaps, I would say I would be bearish on all the people. And of course, markets will do whatever it wants. But like we said at the 100 EMA daily, if we do open over that 100 EMA, we're going to squeeze back up and most likely get a back tested, because what do things need on any time frame? Confirmation. Okay. So the entire prediction is going to be based off the 100 EMA over under to see if it wants to pop after the 3 down. Okay. So let's go over the big clauses for that. So here's that lower gap down big push candle, right? And we came over the 100 EMA. Back tested the golden pocket. We just talked about this, right? But look at day by day right here. We broke over the 100 EMA in the green. That's right here on this daily, closed, right? Opened in a gap up and slammed back into it, because when something breaks over a level, it's really great to back test it for confirmation of strength and support. That's called confirmation. So you're confirming your trend and confirming your confirmation of your support. So when we see that 100 EMA on the intraday chart right here, that's where it is, that big green line. This is a daily 100 EMA. We just have it coded into our intraday charts. We know where it is on the 1 and 5 minute charts. We're not jumping back and forth in between daily and minutes. So if you join our group at BRT, links in the description, you can get all these indicators for nothing. Just shoot me a message. And as we move into the CPI, I believe that those 1 minute gaps that we had just discussed might get a check filled. Now, if it dumps, that's even a better scenario, because the market will come all the way back up to fill these 1 minute gaps at one point or another. So when the reversal starts, let's just say we're wrong and the CPI doesn't come up to fill these tomorrow and we get a short day, that's stoked. I'm stoked. I'm excited, because our initial, not even initial, everybody's watching this triple gap down here. Should be 1, well, gap up, gap down, gap up. There's 3 right here. And we have them marked off right here, 493.84 to 492.53, okay, QQQ. So if CPI bangs off this 100 EMA because of a 3 down that's already happened, the market loves to run in 3s. So if we have an all-time high, we have a drop, 1, drop, 2, drop, 3. Now it's hitting support that we haven't hit in a long time, and we talked about it in every video here, 100 EMA, and we're kind of popping back up. So even if we're going to rip rally back up here and put it a big green CPI day back to, who knows, we could go come up to, you know, equal highs up here before it wants to slowly chop around for a little bit and decide if it wants to come back down for the triple gap or not, or do we break the 100 EMA and come down to the triple gaps? Well, CPI is going to come out tomorrow morning. It's going to be in the pre-market, and it's going to be very big, hopefully, and we're going to get a giant candle, and I'm just going to do the same thing I always do, man. I'm not going to care about it one bit. I'm going to let the candle get created like I did on PPI today. I let this candle get created, the creation candle, 5 minutes. I'm going to fib out the high-low of CPI, and I'm just going to play the golden pocket like I did. So one of the trades that we had today was exactly that. We seen this candle coming up, and as we create this candle, first tag metrics, right? So let's do it on the futures real quick. So we'll talk about this real fast here on the recap. So our futures, we had the PPI, and the first tag metric on golden pocket is what I like to play a lot of the times. Good probability, right? So you take the high, the low, and price action is obviously coming from the top side because we ran up. So it came down to the golden pocket. I love to buy the golden pockets either above or below the 50. So we cracked through the 50. I would have bought at the 50. I would have bought it right here at the 38.20. I would have bought the confirmational high or low. We're the top channel of the RSI. And generally speaking, we can come back to equal highs or fill the top. So this came back down to golden pocket, up to equal highs, okay, double top, before it let loose. Now, again, it was already signaling, look at the MACD roll, look at everything else. And last but not least, which I like to cover for you guys, is the VIX. We are in support. What do we say at 5-day deviation? On the standard deviation chart, the volatility index has a very hard time staying above or below +1, -1. This is our 0 line in the white. This is +1 up here, -1, -2, right? So at one point today, we were right here on the half deviation. Now, deviation is forever calculating, so the price action is not going to reflect where the standard deviation was perfectly, but it's going to come back down. And if you were live trading it with us today, you would have seen the half deviation. And we've seen the VIX come into the half deviation, which is now down here, into it and slammed up, chasing the gaps. This is another thing that we had talked about this morning, causing a bearish outlook, macro bearish for the day, downside for the day because of this gap. PPI, look at the gap that it created on the VIX, and it created a double gap. So if you zoom in right here, we got a tick right here, 730, 725, right? We got 2 gaps, one right here on the price action, 1928, one right here at 1924. The algorithms will speak to each other. They will come back at some point in time and chase those down. We talked about that in our last video on the cluster gaps that we had lost on the top here, and we still have more way up in the 23s. We'll go over that at a different video. But when the CPI hits, we still have 2250s to 23 cluster gaps up here that the VIX still has to get. Now, for the day trade today, we were under the -1. So price action again, 5-day deviation, -1. That is big support for the VIX. Has a giant gap from PPI. Big magnet target. So imagine there's a magnet above this gap like so, shooting these beautiful little magnetic rays at the price action saying, hey, we probably can fill this gap up because there's a magnet. We have -1, big support. So once we got over that for that support, we had a beautiful run to the double gap we were just talking about, right? So as soon as it found that support, fresh little scan breakout there, came into the top channel of the RSI, got our MACD rolling like we did, and we filled that gap. And that was another thing that we had talked about today in our group, to look for the momentum, to look for the technical analysis to play out correctly to the downside, which we were so happy about. Last but not least, I'll cover real fast the pre-market trades. Our gap algo system picked up this guy this morning. I was on the treadmill here at the gym. Excuse me. For this short, but I called this out for our Discord. Everything was breaking structure to the downside. We had this gap, which is going to be a magnet. So I charted this out, called it up for the Discord, said, hey guys, we can come down here to 5889.80. And lo and behold, full breakdown, smash right into that 1 minute gap. And then we called, well, pre-market yesterday, so we're not going to go over that one. But we also said, hey, there's another gap right here. You can't see it on the screen anymore. I moved it too far. Top right here, I noted everybody and said, hey, 59.11 has a gap up here, okay? Be very careful. That 1 minute gap is still open. PPI opened up to the gap, right to it, and then failed. Come on. Come on, guys. These algorithms speak with gaps. I'm not the only one that knows this. I've been studying this stuff for 10 plus years, and I love the trade style of gaps and how algos talk to each other and how we have at least an edge on sentiment here where we possibly could go. And when we have our possibilities of over-under set, we create magnets from gaps, moving average first tags, Fibonacci first tags, and then we make a trade plan. We use our oscillation, we use our RSI, we use our MACD, all stacking those catalysts to produce these moves like this. And man, it was a great day. If any of this sounds great, you want to trade live with us at Board Loop Trading, the link is in the description, my friends. If not, we'll see you on the next YouTube video. Take care.